Hello, friends. Welcome to Ketty Research Guidance Bureau. Myself, Dr. Kumudini R. Thakur, founder member of the Bureau, would like to say few words for the Bureau. This Bureau provides the guidance to research students. After BCom degree, you are entitled to get admission in master degree. That is maybe MCom, MBA, or any other master degree. Afterwards, if you want to continue your research work and education, this bureau will provide you A to Z guidance. This bureau also provides the guidance to postgraduate students. Means, after BCom, if you join MBA, MCom, or any other degree course, this bureau will give you thorough knowledge about varieties of subjects. Moreover, if you are interested to appear in NET, SLET, or any other competitive exams, this bureau is very helpful and give you the idea about the preparation and examination. So, my humble request to you that please subscribe the channel. This channel is helpful to you for minimum 20 to 25 years. Share your comments and do favor for the channel. So this is my humble request to you. Today, this session is specially designed for auditing. Auditing is a new subject for you. Why? Because you learn accountancy, how to journalize the transaction up to analysis of financial statements. But you know that this era is known as corporate era, and the owners of the companies are shareholders, and shareholders are unable to participate directly in any of the activity of the company. They invest their money, but the promoter or the management is using this money properly or not, they have no idea. So they have to rely on auditing. In this session, I will give you the idea about simple meaning of auditing, features of auditing, scope of auditing, essentials of auditing, difference between accountancy and auditing, limitations of auditing, and if time will permit me, I will give you the idea about objectives of auditing. Otherwise, in another session, we will try to understand objectives of auditing. So let's begin with simple definition of auditing. Auditing is defined as a systematic and independent examination of data First is systematic. Systematic means step by step. And if you want to do your work systematically, first of all, you have to prepare blueprint for your work. Same is the case for auditing. Every auditor they have to prepare their schedule and planning. Second thing is independent examination of data. Independent examination of data means independently they will check each and every transactions, statements, records. Records means it may be purchase book, sales book, or any other record book. Then operations of the business, whether the managers they are operating the business as per the planning or not, and performance. Generally, they measure financial performance of an enterprise for a stated purpose. So, when we learn types of audit, that time we will discuss purpose of that audit. But right now, keep in mind that it is a stated purpose for that they do the work. In any audit, the auditor perceives and recognizes the propositions before him for examination, collects evidence, evaluates the same, and on this basis formulates his judgment, which is communicated through his audit report. This line is very important. So, auditor, first of all, for his examination, he collects the evidence. Evidence means suppose accountant made one journal entry that purchase account debit to ABC account. So, auditor collects the evidence. Evidence means that voucher. Then second thing he checks whether in purchase book these transaction have been entered or not. Then evaluate the same means whether it is right or wrong. And on this basis means he does this work and on that basis formulates his judgment and he takes the judgment for what whether these transactions shows correct picture or not, and as per his judgment he writes the report, and in his audit report he writes everything whatever he judged from the books of accounts. The another definition is also very important. It says that auditing is such an examination of books of accounts. That we understood. Means it is an examination of books of accounts and voucher of business. As will the auditors to satisfy himself that the balance sheet is properly drawn up so as to give a true and fair view of the state of affairs of the business. First, understand this one. It is an examination of books and accounts and vouchers that I explained you. Then, first of all, he has to satisfy himself that the balance sheet is properly drawn up. You know how to draw the balance sheet. First, They journalize the transaction, they prepare the ledger, trial balance, and then they prepare the balance sheet, properly drawn or not. Why? Because he has to check whether they show true and fair picture of the company or not. Financial reports means P&L account and balance sheet. Profit and loss account gives true and fair view of the profit or loss for the financial report. Accordingly, to the base of information and explanation given to him and as shown by books, he can judge only from the records, means books of accounts, whichever the accountant and owner present as per that books, he has to take the decision in which respect he is not satisfied. Means he has to write in his report that in which respect he is not satisfied. And if he is satisfied, then accordingly he gives the report of that particular company. This is the simple meaning of auditing. Now let's try to understand features of auditing. If you follow definition and meaning, then it is easy to understand the features of auditing. First of all, it is systematic and scientific examination of the books of accounts of a business. As in first definition, I explain you systematic and scientific. Scientific means scientifically method of examination of accounts of a business. Second thing is undertaken by an independent person. Independent person, generally it is charter accountant or body of person. Body of persons means suppose for charter accountant they are partners and company assign this task means auditing task to that partnership, then they are body of persons who are duly qualified for the job. If they are qualified means they have degree, then only they can assign the task means they are qualified for that particular job. Job means books of accounts examination. Third thing is verification of the legal health of the transaction and the state of affairs as shown by the books. In second definition, I explain you profit and loss account. Generally, your financial results you can judge by profit and loss account. So whether they shows true picture or not. And in balance sheet, you enter assets and liabilities. That also they have to check. Means they have to verify. Next point is critical view of the system of accounting and internal control. If system is not functioning properly, then he can make the suggestions for that. And if he is very active, then he can control the situation. And generally, if charter accountant is still skillful person and honest person and checks each and every transaction, then the chances of malpractices are very less. So this way he can control eternal body of the institution. Another thing is auditing is done with the help of vouchers. I explained you the meaning of vouchers. When you purchase any of the thing, that time, if you ask for the bill, then it is a proof for you that for this item you paid this much amount. And on that basis, if your father or mother have any doubt, you can show that, see, you gave me this much rupees and I spent this much for this item. So this is verification. Vouchers, documents, information, and explanations. If the auditor is not satisfied with any of the transaction, then he can ask the questions. And as per the questions, accountant or the management, they have to explain that situation. And he can rely on that explanations received from the authorities. Authorities means I told you that accountant keeps the record and other authorities management. The auditor has to satisfy himself. This point we have to keep in our mind for lifetime, because if we want to improve our efficiency, knowledge, and skill, then first of all, work hard, put your sincere effort, and then, if you are satisfied, then only you can expect something. Same is the case that if auditor has some doubt, then for the clarification of that doubt, he has to check that transaction. And if he is satisfied by himself, then only go ahead. Otherwise, take precautionary measure. Another feature is the auditor has to inspect, compare, check, review, scrutinize the voucher supporting the transaction and examine correspondence, minutes books of shareholders, directors, memorandum of association, and article of association in order to establish correctness of the books of accounts. Now, try to understand each and every word. Auditor has to inspect, means he has to do inspection, and if he inspect, then only he can get correct information. Second thing is compare, comparison of the transaction, comparison of purchase, sales, etc. Check, then review it whether it is right or wrong. Scrutinize the voucher as per the transaction and ask for the supportive documents, correspondence, minutes book, director, memorandum of association, article of association in order to establish correctness of the books of accounts. And when the company is new and when the auditor audits the report first time, that time it is essential to get the idea about memorandum and articles of association. Generally, every year company never changes them. So first time it is better to check it. Now, essentials of auditing. First of all, accounting control. As the accountant is writing the report and owners of the company, they are shareholders. So if they want to manage the controlling system, auditing is essential. Otherwise, generally, the chances of malpractices are more. Then second thing is for the safeguard. Safeguard is the most important thing because if the fraud took place and then you take the actions, then loss is already made. But if you take precautionary measure, so at least up to some extent you can minimize the frauds and errors. So it plays the role of safeguard. Third thing is assurance. Assurance to the shareholders and government and other bodies that this books of account shows true and fair picture of the company. That assurance you can get. Then assessment. Assessment of P&L account, expenses and revenue, and assessment of liabilities also, and responsibility. That assessment they have to make. So it is essential for that. Then review. We know that in our country, generally, the prices of land and building are increasing like anything. If the company has purchased a piece of land 25 years back, so obviously the value of that land is very high today. So if you want to find out current value of your asset, that time also it is essential, and you have to give proper explanation for that. So review of assets, review of liabilities you can consider. Then reporting tool. Auditor has to report to shareholders or other fellows. So for reporting tool, it plays a great role. How to write a report, that we will learn afterwards. And auditing is a practical subject. Practical subject means examples will not come, but in practice, in reality, you have to do auditing. So, in that manner, it is a practical subject we can consider. So, these are the essential points of auditing. Now, let's try to understand scope of audit. First and foremost is it is a legal requirement. Legal requirement for the companies in our country. For company, it is compulsory. For sole proprietorship and partnership, it is not compulsory. But for the company, it is compulsory. So we can say that it is a legal requirement of the company. Then, entity aspect. We know that business is a separate for the person. In sole proprietorship, owner is the manager and he is whole and soul. But separate entity we can understand with the help of the company very nicely. Shareholders are the owner of the company, and management is a different thing. So, business is a separate entity than the owner. This aspect we can understand very nicely in company. Next one is verification of transactions. Means you have to examine vouchers, and on the basis of that voucher you can verify the transaction, whether the transaction is right or wrong, or whether there is any error or chances of fraud are there or not, that you can examine. Then proper communication with shareholders, many times with government and banks also. If your reports are very good, then you can show your reports to each and every person who demands that. And then you can convey proper understanding of your books of accounts. Then evaluations of assets and liabilities both means, suppose in your books of accounts the total value of your one asset is 10 lakhs, but in reality hardly the value is 1 lakh, then you have overvalued your assets. So auditor takes care of the evaluation. Same is the case for the liabilities. Suppose your liabilities are more and you highlighted very less. For that, suppose you do window dressing or any other technique, the auditor has to edit that transaction and he has to evaluate the value of assets and liabilities. Next one is allocation of income and revenue and expenditures also, means, you know, capital expenditure, capital revenue, and same is the case for gain also, capital gain and general income. So whether the allocation of expenditure and revenue is proper or not, he has to check. Then he has to give opinion for the books of accounts, whether these books of accounts shows true and fair picture of the company or not. This is the scope of audit. Now I gave you the brief idea about meaning, features, essential, scope. So one question comes in your mind, that what is the difference between accountancy and auditing? First one is meaning. You know the simple meaning of accountancy. It is recording of all the day-to-day transactions in the books of accounts, leading to preparation of financial statements. This you already finished in 11, 12, FY, SY. You learn how to journalize the entry, how to make the ledgers, trial balance, balance sheet, means it is up to financial statement. While auditing is the critical examination of the transaction recorded in the books of accounts. Means you have to check whether these transactions are entered rightly or not. So, first you have to prepare the accounts, and afterwards, in auditing, they examine the accounts. Second is about the nature. Accountancy is concerned with the finalization of accounts, that you know, and the object is to ascertain the trading result. Trading result means profit or loss. And in auditing, it is concerned with establishment of reliability of financial statements. You want to establish reliability of financial statements. So auditing is very, very helpful to establish the reliability. Then object accounting commences when bookkeeping ends. That you already know. So as soon as bookkeeping ends, your accounting commences. While auditing begins when accounting ends. So first is bookkeeping. When bookkeeping ends, your accounting starts. Your accounting ends, then auditing begins. Then commencement, it involves various financial statements and maintenance of books of accounts that you know. While auditing depends upon the arrangement or upon the previous law. So this is the dependency of accountancy and auditing. Scope: auditing does not go beyond books of accounts. So as soon as you prepared financial reports, accountants work already ends, means it never goes beyond that limit, while auditing goes beyond books of accounts and they can check so many things also. The scope is wider than accountancy. Then designation, or you can say degree, when the person writes the accountant, he is known as accountant. Generally, commerce students, they can be an accountant. But nowadays, we have computerized accounting system. And if you have knowledge of that tally and other packages, anybody can write books of accounts. Why? When the person audits the account, he is known as auditor. Level of activity, obviously, for books of account, it is the first activity, and auditing begins after books of accounts, so it is next activity. And sequence, accountancy is a beginning, and auditing after completion of books of accounts you can start. So this is the brief idea about the difference between accountancy and auditing. I would like to explain you the advantages of auditing. So I divided these advantages in three categories. So first category is businessman's point of view. Businessman's point of view means the person who is doing the business. For them, detection of errors and frauds. If you audit the reports, then the businessman can easily understand the detection of errors and frauds in the business. So if the accountant has some malpractices or malified intention, with the help of auditing, he can understand and he can take precautionary measures also. Second thing is, if the business organization wants to take a loan from the bank, then obviously they have to submit their books of accounts. And if that books of accounts are audited, then banks and banks managers, they can rely on that books of account. Next one is builds reputation. Obviously, if in time you circulate your audited reports to related person, it increases reputation of your firm and your company, and anybody can rely on your company. You can get more credit and you can attract your clients. These are also the benefit. Then proper valuation of assets. Obviously, auditor takes care of the valuation of asset. If it is overvalued or undervalued, he can highlight that thing in his audit report, and next year he can take that point in consideration and can mention proper value of the asset. Then for the government acceptance, audit is compulsory. If your books of accounts are audited, then government accept that one for tax purpose also. And with the help of auditing, you can update your accounts, because if your accountant is lethargic, then it may possible that at the end of the year he may write the report. But right now it is not possible because every corporate quarterly they have to submit the report. But if they are lethargic, then till date they will postpone the work. But if regular auditing is there, then they have to update their books of accounts. So these are the main benefits for businessmen. Another party is investors' point of view. Generally, public limited companies are listed in stock exchanges. And if you want to invest your money in that company, then you have to study financial reports of the company and you have to do fundamental analysis. So, if investors review the reports, then at least he can protect his interest. He can check that if auditor is good and gives proper report, then he will invest his money in that company. Otherwise, he will not invest. So he can protect his money if the reports are audited. Then it is a moral check. You are the students of TY Dukam. You have enough experience that in class, if your faculty member takes the present, then for the present you attend the class. Means it is a moral check. Same is the case. If anybody gives free education, generally people don't bother for that one. Same is the case for today. So, moral check you can keep. Proper valuation of investment. You know, proper valuation of investment is must. If it is overvalued or undervalued, then it is not good for the investment point of view. Another thing is proper valuation of assets so that the investor can judge the net result of the company. In mergers and acquisition, you learn how to find out net value. So for that, it is good. And good security. If auditor is strict, then they will manage books of accounts nicely. Means for the security purpose, it is very good. And investors can get update accounts, means the current scenario they can get from the reports. Third party is other advantages, means other person, if they are not the owner or investors, then which advantages they can get. Evaluate financial status. Anybody can evaluate financial status of the company with the help of audited reports. Then settlement of claims. Suppose company has to pay more liabilities and the managers of the company they highlighted the situation that right now company is unable to pay your money. So if you do some compromise, then we are able to pay the liability. So with the help of books of accounts, they can argue to their creditors. At the time of liquidation also, settlement claims, they settle in this manner only. Next one is evidence in court. If anybody puts the shoe in the court of law for the evidence purpose, they have to highlight their audited financial reports. Then, calculation of purchase. I gave you the example of mergers and acquisition. You also calculated purchase price. So, for that purpose, also, it is essential and it is beneficial. And the main important thing is for the taxation purpose, it is very useful. You can judge your real profit, and as per the profit, you can calculate your tax liability very nicely so that you can save penalty amount and other things. So, for that, it is essential. And settlement of accounts, it is also beneficial. So, these are the main thing. But every coin have two sides. Same is the case for auditing also. It is also not free from limitations. But majority of the limitations are really not the limitations of auditing. It may be the limitation of a person or system. First is not useful for small units. This is the limitation, but small units are small and their transactions are less. So it's okay. And if they follow auditing, then they have to pay more money. But if the profit margin is good, even small units can follow this one. No assurance means auditing reports are 100% accurate and correct, nobody can say. But some assurance you can get, but not 100%. The chances of frauds and errors are still there. Possibility for errors and frauds means if the fraud maker is very intelligent, skillfully he can manipulate the transactions and chances are there. No detailed information. Generally, auditor gives summary of the report. So, if you want to inquire in detail, you have to take the initiative and that auditing you have to manage. And generally, the key members or the key persons have a great influence, and many times auditors are unable to give any critical report due to this influence. But if auditor is little bit honest and having a courage, he can save himself and he can give good report. Disturbs routine work. Obviously, if auditor visits the office, then majority of the staff is busy with his work. So their routine work may disturb. But if you take proper care, then simultaneously you can do both work. And nowadays we have online system and IT, so we have not to bother for that one, and it is expensive. Obviously, this is the extra work. So for that, you have to pay fees to auditor, his staff, other expenses also you have to make. So these are some of the limitations, but if you take care, then some of the limitations you can avoid. Now let's try to understand objectives of auditing. We will divide these objectives into three categories. First of all, primary objective, subsidiary objectives, and third one is other objectives. Primary objectives means main objectives. For that, you are doing the auditing work. So, they are the main thing for you. Subsidiary means your main objectives are different, and along with that objectives, you can fulfill other objectives also. So, they are known as subsidiary objectives. And other objectives are also there. Now, these objectives are completely little bit lengthy. So, in next session, I will start with objectives of the auditing. Today, I give you the complete idea about meaning and definition of auditing, features of auditing, essential of auditing, then scope of auditing, difference between accountancy and auditing, limitations of auditing, and brief idea about objectives of auditing. In next session, we will discuss all these objectives in details. But before that, please subscribe Katie Research Guidance Bureau. This bureau is specially designed for students only. It is a free channel and it will give you idea about not only auditing but for your practicals means ratio analysis and for other subjects also. So subscribe the channel, give your comments and please favor the bureau. If you have any doubt, any question, then you can ask me and I will try to dissolve your problems. All the best. Thank you very much.